Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, February 16th, 2026, and here is everything you need to know as the markets open for today. We are coming in after a weekend when global investors have been digesting Friday's moves on Wall Street, the latest signals from central banks, and a mixed set of data points on growth and inflation, all of which will shape how risk sentiment evolves as a new trading week begins. Let's start with Wall Street's overnight Q, or more precisely, Friday night's Q. On Friday's close, the Dow Jones Industrial Average finished near 49,501, up about 0.10%, showing a modest positive bias into the weekend. The S&P 500 ended around 6,836, up roughly 0.05%, while the Nasdaq 100 closed near 24,733, gaining about 0.18%, so the overall tone from the big three indices was slightly constructive rather than euphoric. Those small gains came against the backdrop of traders still watching US Federal Reserve commentary on the timing and pace of any future rate cuts, and weighing a heavy flow of corporate earnings that have generally been decent, but with stock-specific volatility around guidance. With no fresh cash market session since Friday, there is not much in the way of new price discovery from the US yet, and the real test of sentiment will come when futures and pre-market trading pick up later today. But as of now, Indian traders can treat the US backdrop as mildly supportive rather than a major headwind or tailwind. Now, bridging the gap between Wall Street and Dalal Street, let's talk about Indian ADRs listed in the US, which give a very direct overnight Q. According to the latest TradingView snapshot, Infosys ADRs closed around $14.72, rising about 3.59%, a strong move that signals positive sentiment toward Indian IT, and, in particular, this large-cap technology name. HDFC Bank ADRs, on the other hand, ended near $32.52, down about 1.03%, and ICICI Bank ADRs finished around $30.62, down roughly 2.05%, indicating some pressure on the key private sector banks that are heavyweights in our indices. Reliance's sponsored GDR closed close to $63.50, down about 1.70%, suggesting a softer tone for this important conglomerate and its related sectors. For Indian investors, the message from ADRs is mixed. Strength in Infosys points to a supportive setup for frontline IT, while weakness in the big private banks and Reliance could cap gains for the broader Nifty at the open and may lead to some sectoral divergence during the day. Turning to Asia, early indications from the region offer more context before our own opening bell. As per the latest data before this show, the Japan 225 index is hovering around 56,942, down roughly 0.97%, which implies some profit-taking or risk-off tone in Japanese equities at this point. The Hong Kong HS50 cash index is trading near 26,499, almost flat, with a gain of just about 0.02%, suggesting very muted movement so far. The Shanghai Composite total return measure is around 4,682, down roughly 1.26%, pointing to a weaker close or early session in mainland Chinese equities, which often weighs on overall Asian risk appetite. Closer home, GIFT Nifty 50 futures are an important direct cue for our own open. The latest reading shows GIFT Nifty near 25,497, up about 0.17%, indicating a mildly positive start for the Nifty 50 when trading kicks off on the NSE. Remember that GIFT Nifty represents futures trading rather than the cash index, so consider this as a directional pointer, rather than a guarantee of where the index will settle after the first hour. Putting all this together, Asia is sending a somewhat cautious signal from Japan and China, a largely flat signal from Hong Kong. But GIFT Nifty is hinting at a small gap up or at least a firm start for Indian equities. On the global news and geopolitics front, the overarching themes remain familiar even if there is no single new shock headline this morning. Markets are still balancing expectations of future rate cuts from major central banks, including the US Federal Reserve, with ongoing concerns about inflation that is easing, but not yet completely tamed. Geopolitical tensions and any disruptions to key commodity supply chains, especially in energy, remain a background risk that can flare up quickly and hit risk assets. It is also worth staying alert to any fresh social media messages or comments from President Donald Trump that touch on trade, tariffs, or relationships with key partners like India. Even a single pointed remark can shift sentiment in sectors such as IT services, pharmaceuticals, or metals if investors interpret it as signaling future policy moves. As of the latest information today, there has not been a brand new game-changing announcement overnight, but the risk environment remains fluid, so intraday news flow still matters. Back in India, the focus now turns to domestic news flows and sector-specific stories that will drive the day's action. Keep an eye on any fresh commentary from the Reserve Bank of India, especially around inflation trends, liquidity conditions, and growth. Because even without a policy meeting, speeches and reports can subtly shift market expectations for future rate action. Foreign institutional investor flows will also be important. Sustained FII buying tends to support large-cap banks, IT, and index heavyweights, whereas continued FII selling can drag the indices lower, even if domestic investors remain net buyers. On the stock and sector front, the market will continue digesting the latest batch of quarterly results, guidance on margins and demand, and any corporate actions or regulatory updates, particularly in banking, IT, autos, and capital goods. If SEBI has issued or clarified any guidelines around F&O trading, margin norms, or position limits in recent days, those can materially affect intraday volatility and liquidity in Nifty and Bank Nifty options, so it is important for traders to scan those updates on their usual official channels before the opening bell. From a technical setup perspective, it helps to frame the day in terms of clear support and resistance zones for Nifty 50 and Bank Nifty rather than fixating on every small tick. For Nifty, think in terms of the recent swing low and the previous session's low as immediate support areas, and the recent swing high and any overhead gap zones as resistance. A strong breakout above resistance with good volume can open the door to further upside, while a decisive break below support can invite profit-taking or short-side trades. Bank Nifty, being more volatile, demands even more respect for levels. Traders should pay close attention to the prior day's high and low, and watch for potential false breakouts in the opening 15 to 30 minutes, when volatility and spreads can be wider. A sensible approach today is to mark the previous session's high and low on both indices before the open and treat those as key reference bands. Until price convincingly moves and holds beyond those zones, avoid overtrading and wait for a clearer trend to emerge. Looking at commodities, the latest TradingView data show that gold, tracked via US dollar CFDs, is around $5,014.280 per ounce, down about 0.55%, while silver is near $76.655 per ounce, down roughly 0.88%. That pullback in precious metals suggests a bit of cooling in the recent run-up, and can sometimes indicate a slightly better appetite for risk assets, though the relationship is not always perfect. Crude oil, specifically WTI, is trading around $62.90 a barrel, with a modest gain of roughly 0.16%, so there is no dramatic new move there. But energy prices remain an important swing factor for Indian macros and for sectors like oil marketing, paints, and chemicals. Base metals are also crucial for metal stocks and global growth sentiment. And while individual contracts may be seeing their own moves, the broader takeaway today is that commodities are not flashing an extreme new signal, but they remain a key space to monitor through the week. To wrap up with the day plan, keep the focus on discipline and risk management rather than aggressive bets at the very start. With Wall Street's latest signal coming from Friday's modestly positive close, Asia sending a mixed but not panicky tone, and GIFT Nifty hinting at a slightly firm start, this looks like a day where stock and sector specifics, earnings reactions and flows could matter more than a single global macro headline. For intraday traders, that means using the opening minutes to observe how Nifty, Bank Nifty, and the big sectors behave around the key technical levels, instead of jumping in on the first tick. Keep position sizes moderate, always use stop losses, and avoid averaging into losing trades just out of hope. For investors with a longer horizon, days like this are better used to refine watch lists, stagger entries, and reassess asset allocation, rather than making large one-shot bets based purely on overnight cues. That's it from this morning's edition of What Will Move the Market. Stay tuned for the evening wrap to see how these cues actually played out through the session. Send in your questions and what you would like us to cover next, and don't forget to subscribe to this podcast so you can join us every trading day right at the open.